Hey everybody, JJ here, Bull to the Bust. It is Wednesday, March 11th. Approaching 1,000 point in the red here, 1,000 point drop at the open today. Market's been open for actually over an hour as I'm recording this right now. And it's not uncommon to see this type of volatility, big up days, big down days, before a market totally takes a dive. Now I'm not in the markets here, but I'm on the fence as far as trying to analyze this. Again, this outbreak that we've seen gives this administration the perfect excuse to allow this bubble to finally deflate. But if that's the case, why are they not letting it drop faster and farther? Why are we still seeing these up days? In my opinion, these could be dead cat bounces to sucker more people into the markets. Or here's the other side of things that I'm looking at. They could be staging the biggest comeback in stock market history if and when this global fear that's spreading finally fades away. Right? So I'm leaning towards that outcome that as far as my guesstimate. Right? You let me know what you think. I mean, a lot of this is guesswork. You have to figure out what the manipulators are going to do. What are the motives? Right? It's almost like investigating a crime, right? So you let me know what you think. Is this a dead cat bounce or suckering people into the market? Of course, today's in the red, but I'm talking about the big green days we've had. Because here we are now over 1,000 points down on the Dow, almost erasing yesterday's gains. Right? Let me know what you think down there, please. Is there going to be a huge drop, even worse than we're already seeing? Are we going to go below 20,000? And then will we stay below 20,000? This is the Dow Jones. Or are we going to get pumped back up to new highs? That way the administration could say, hey, look at our policies, aren't we great? We brought the stock market back from the biggest sell-off of all time. Right? If it ends up being the biggest sell-off of all time. Well, we've already had the biggest drop in the Dow Jones as far as the point drop goes. Well, you let me know, but here's what's on tap for today. Huge stimulus plans being announced March 11th. It's going to consist of the following: bailouts, tax cuts, tax incentives. We'll talk about that. That's pretty insane. And the UBI, now the administration is not putting this out there, but there are individuals talking about just paying people, just paying working class citizens, right? Just giving everybody money, right? So it won't be on the grand scale of a industry bailout, but it's being discussed. And what is it ultimately? It's debt on top of debt. Will it fix the problem? Let's put a question mark there. The answer is no. It's just a band-aid on a bullet hole, basically. And then we're going to wrap it up with outrageous CEO pay that shows bubble history, and it shows that right now we are near or at the peak of this bubble. Let's go ahead and get started here. Headline from Market Insider. Now, the administration is keeping this plan, what they're calling the economic response. They're keeping it kind of secretive, but you know they've been talking about certain things over the past few months and past year or so. And this is what's being floated out there as the steps it could take. Of course, we've got paid sick leave for the sickness outbreak, and they're going to try to make it where everyone can take this paid sick leave, even if you've ran out of it or don't have enough sick leave with your company. So if your company doesn't offer enough, they're going to try to come to the rescue there. Tax cuts. Let's hope there'll be permanent tax cuts. Right, but that is being discussed. We've talked about that. Nothing new to any viewers on this channel. And then you ask, well, how can they do tax cuts when we're the world's largest debtor nation and we're running trillion-dollar deficits? Well, that's because the United States, we have an unlimited credit card. So there you go with that. Right, targeted relief is what they're calling it here for certain industries, including airlines and other travel industries. We already bailed out the farmers over the past couple years, so this will just be more debt on top of debt for that. All right, small business loans, right? That's the solution, is to let people borrow more money. That's right, think about that. So when the air starts coming out of the bubble that was blown up by too much debt, the solution is to offer more loans and more debt. There you go. So as you can see, there's no long-term solutions being floated out here. It's all just more of the same, right? When are people going to wake up and start realizing what is happening. People are cheering for stimulus, bailouts, tax cuts, more debt, more debt. Give us more loans, right? Put us in more debt, right? And people think this is a good thing. It's pretty crazy. But this one blows everything else away. The White House is considering tax incentives for Americans to buy stocks, right? Tax incentives to buy stocks. So why not give tax incentives after the stock market crashed? I guess you could say we had a mini crash here this year, right? But why not 2009 when things bottomed out? February 2009, I believe, was the bottom. Why not give tax incentives back then to encourage people to get in at a time that makes sense? Because right now, again, we're near or at the peak of a bubble, right? Does anyone think this is a good idea right now? I don't think so. Again, like the dead cat bounce, it could be a way to sucker more people into this market for the ultimate wipeout. The ultimate wipeout, right? So think about it. If the stock market wasn't in a bubble, even after the big sell-off, we're still in a bubble, right? It's still overvalued. But if it wasn't in a bubble, then why do you have to give tax incentives for people to buy stocks? It just doesn't make any sense. And let me just read the excerpt here out of this article. The proposal, one of many new tax cuts under consideration, would see a portion of household income treated as tax-free for the purpose of investing outside of a traditional 401k. Under one hypothetical scenario described by multiple officials, a household earning $200,000 could invest $10,000 of that income on a tax-free basis, although officials noted these numbers are fluid. One senior administration official quoted saying nothing is ruled out, but also that nothing is ruled in, unquote. So it's going to be very interesting to see what they try to come up with tonight. Whatever it is, based on what we know right now, it's not going to be a solution. It's going to be a Band-Aid on a broken leg. Is anyone surprised? I'm not surprised. Right, here's another idea. Recent article, Obama's former top economist says Congress should immediately send $1,000 to every adult to stimulate the stricken economy. So it's not exactly UBI. It's not a consistent income. It's a one-time, quote, stimulus payout. And ask yourself, will this fix the underlying problems? You let me know. Will $1,000 to every adult get us out of the situation right now or not? I think you know what I think. They're also talking about $500 to an additional $500 to every adult per kid, right? So $1,000 per adult, $500 per child for this stimulus package, right? All right, and again, back to the previous article that we mentioned, nothing is off the table right now. So we could see a combination of all these different ideas put out there. Who knows? Finally, on a bit of a different topic here, let's take a look at the outrageous CEO pay, and this shows bubble history. Let's take a look at a chart here. All right, this is not updated here, but you get the picture because it does show the previous bubble peaks. That's what I wanted to focus on here. And this is the CEO to typical worker salary, and we see every time at the peak of a bubble, the CEO ratio to worker pay peaks. We saw the dot-com bubble here, it peaked. Of course, we saw the 2007-2008 peak of the housing bubble. And if we look at the line, we're here in this territory again. We're at overinflated CEO pay levels. It's always been overinflated, even after it drops, but especially at the peaks of these bubbles. So just another indicator that we're at or near the peak of this bubble. And why does CEO pay increase the biggest amounts or the most insane amounts during the peaks of bubbles? Well, that's when corporate debt and corporate profits are pushed into stocks, stock buybacks, right? The upper level executives, the CEOs, they can cash out, so the pay goes up because they calculate the stock payouts and benefits into the salaries. Then it all comes crashing down. Of course, their pay will drop a little bit during those times. The government comes in and bails out the banks that loaned to these corporations. Then they start the next cycle all over again. And let's take a look at CEO to worker pay by country. We see, of course, the world's largest debtor nation right over here, the United States. We are the winner. Ding, 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 ding. We have the highest CEO pay compared to workers' typical salaries. Right, again, do you think it's a coincidence that the world's largest debtor nation also has the most outrageous CEO pay? Of course not. Right, this is so simple, anyone can figure this out. Right, the more debt, the more stimulus is pumped out, the more gets pumped up to the top or pushed to the top. Sure, they may pass a little bit of a pay raise out to the workers to keep everybody from revolting, right? Or maybe a $1,000 stimulus package or an extra $500 per child there. So everybody keeps their heads down, don't ask any questions, just be happy. This is the system that leads to the American dream. Well, unfortunately, the American nightmare is about to unfold once again, and this could be worse, far worse than any other previous downturn or recession or depression. Right? So again, we're going to keep an eye on the bubble blowers, the string pullers, the market makers, manipulators, and try to help you stay ahead of it. But thanks for watching this update, everybody. Are you prepared for the bear? I hope so. Not sure if I am, but I hope you are. Bye for now.